You're listening to the Perth Property Show, Australia's only weekly property podcast by West Australian experts for West Australian listeners. Catch your latest episode every Monday at 7 a.m.
Good morning, everyone. Welcome to the Perth Property Show. My name is Trent Fleskens, your host as always, and welcome to the last episode of 2025, our market wrap for the year, and what a year it has been. It is honestly one that I believe has surprised everyone in this industry on a number of fronts when it comes to constant demand, government policy, ever dwindling supply to levels we never thought we would ever see in this market. Median days on market that continue to stay at a stubborn level just around a week. And with all of that highly volatile and toxic cocktail of data points and fundamentals, the outcome that invariably comes from that, and that is price growth that a lot of experts in Western Australia and most certainly nationally were not betting on. And so 2025 will go down in history as a barnstormer, not for the same reasons as 2023 and 2024 were, but for some very unique and chronic issues that continue to push Western Australia's property story into new records on a daily basis. It is the 29th of December, and this is our sign-off for the year, but it won't be our sign-off overall. We will have Andrew Lefort, Planning Director of the City of Gosnells, in next week to have a conversation looking forward into 2026 about how the planning system is sitting both within Western Australia broadly, but also specifically in the City of Gosnells, referencing the new local planning strategy 24 that came in only a couple of months ago, and how that may respond to the demand-supply relationship in his city. But let's crack on anyway with this wrap-up. This isn't just a look back, it's a data-driven autopsy of one of the most fascinating years in West Australian real estate history. We started 25 with higher hopes and higher prices, and somehow we're ending up in an even tighter space than we began. So let's do a deep dive onto the supply-demand chasm, the construction numbers that we've been looking at, and the suburbs are absolutely crushing it as well, despite a lot of down talk from East Coast commentators and banks over the last year. And also we'll quickly look at the government's housing policy, a couple of policies that have really impacted us as well. To understand where we are now in December, we really have to take a look back at where we were in January. And back in January, the median house price in Perth was sitting around $740,000, according to REWA. And we thought at that point in time that whilst the market wasn't cooling, it was certainly on a pathway towards rebalancing over the next couple of years. We had about 5,600 active listings in January, which was slowly rising from a low of 3,100 in May 2024. And so while supply was in no way facilitating a balanced market with mobility, it was certainly moving in the right direction. So let's fast forward to December 2025, and the landscape certainly has shifted in a direction none of us, including myself, thought we would be in. The median house price is now sitting at between $830,000 and $850,000, depending on whether you ask REWA or CoreLogic. And that represents another year of double-digit growth in 2025. Now, most of that growth came in the second half of the year on the back of interest rates and government policies that we'll talk about later. Now, this is the real kicker, our active listings. So I mentioned 5,600 listings in January. We're now at 2,250 listings in December. And I've spent weeks, months, years referencing this number, and often saying it can't get lower than this. It's never been as low as this, and we don't have a forecast that would suggest it could get lower than this. It got lower than this many times this year, pretty much on a weekly basis for the second half of this year, to a point where we're in uncharted territory. We have around a house available for every 1,500 people in this state. That's pretty crazy when you think about it, given we had a house per about 150 people available in 2019. So the market has contracted by the factor of 10 versus population over the last 6 years, and that obviously is reflected in house price changes. And as I mentioned, days on market in January, it was sitting at about 10 to 12 days, coming up from 8 to 9 in 2024. Today, well, we're back down to 8 to 9 again. If it's not under offer in that time frame, you'd have to ask yourself what's wrong with the property at the moment. Most of the time, the only thing that's wrong with that property would just be over-ambitious pricing from the seller, because what we do know is that the market is very much open and amenable to compromise on quality and location these days, simply for that accessibility and mobility. So let's now move on to construction. And we've spent the last 4 years talking about that supply story and how it has continued to dwindle, and the need for new supply to come on in the face of constant demand chewing up our stock on market on the established side. And what we do know is that we've had a year of strong growth in the construction side, despite dwindling stock on market. We saw 22,600 new completions this year. That's the best we've had since 2017, but it's still probably 50% less than we need at this point in time, given the annual immigration numbers we have coming in. Now, the immigration of 65,000 people in the last 12 months officially came out very recently, and about 12,000 of that is coming from the East Coast. The rest are coming from places like Ireland, England, India and China. Those countries really make up most of our immigration into Western Australia over the last few years. And those are the people who are jostling for position, for rentals, and to buy after that initial period putting their toes in the West Australian market, which are edging out first home buyers and downsizers of existing Western Australians in the market right now. And that number really flies in the face of the Housing Accord number that the federal government set for us, which was essentially 25,000 houses a year. 25,000 houses a year supports around 60,000 new immigrants coming to this state every year. We've been sitting above that number between 98 and 65,000 for the last 4 years. So what we know is that, one, that Accord number hasn't been enough for the last 4 years, and therefore there is a deficit. But the actual numbers that we've been constructing over the last 4 years have been increasing from a low of about 13,000 to 22,000. So every year that deficit has been building up. So even if we were somehow able to get into the high 20s to the early 30s next year in our construction numbers, which would require apartment buildings to really start completing at scale, and at about a scale of 10 times more than they are right now in WA, we would still be playing catch up for a couple of years on the deficit that's required people to start sharing houses and apartments and seeking granny flats as a form of accommodation rather than their own place. Approval numbers in 2025, which talks to next year's completions if we're lucky, are at 23,700. So what this suggests is that we're not going to meet the 25,000 Housing Accord target set by Albanese, and also not the 30,000 houses that I believe we need to get moving. Now, the biggest number we've ever hit was 32,000 in 2016, and that was ironically in the year where about 50,000 people left our state, which created that 4-year hangover that we had between 2016 and 2020. And I guess my message there is, if you're waiting for new supply to come in to lower prices to balance out our market, I've got bad news for you. It's not going to happen. The numbers, when we look forward, as much as they are aspirational and everyone is doing their best, not going to meet the demand side requirements that we have in 2026 simply just from an immigration outcome on the amount of people that are coming into this state. 2026, when it comes to that balance on demand and supply, whilst hopefully somewhat improved on the historic low we are sitting at this week in the last week of 2025, we're going to need a number of years here to get that number of stock on market to be able to rebalance out to that 13,000 number we need to simply have a balanced market. Let's have a look at where some of the big winners were in terms of price growth, and it's no surprise we saw this in the last swing. Balga and Nollamara saw nearly 40% growth in those pockets over the last 12 months, and that really is talking to, if you look on a map and you take away the socio-demographic and socio-economic biases we have for those suburbs, they're some of the most accessible suburbs and underpriced suburbs when it comes to location and proximity to the city, really good town centres and the ocean. And again, what we tend to see is suburbs like this really start to see massive growth when the investor market goes on a run as well. Whitby and Munajong on the south have started to come on, and I think a lot of that has to do with simply a changing dynamic on those suburb profiles. We're starting to see an urbanisation in that area, new housing, which obviously costs a lot more than what the old housing used to cost. So the data side probably skews that as well. But what we will see going forward as a splash zone to that AUKUS Rockingham town centre, as the city of Rockingham become more and more expensive than they've ever been before or ever would have expected to be relative to time, places like Munajong directly east of Rockingham start to become those cheaper centres, accessible without too much traffic, to be fair, going on an east-west basis for a work centre as well. So I wouldn't be surprised if we see some continued movement emanating east out of Rockingham over the next decade. Midland as well, that's been a sleeper suburb. Midland has really been down in the dumps. It was hardest hit amongst the Perth metro suburbs along with Mandurah in the downturn, and it's taken a long time to recover simply because there hasn't really been a lot on offer. It had a lot of oversupply with apartments and units back in the last boom, and it's nearly the last suburb to be able to start to see some growth in the market. The Midland space as well really benefited in 2025. Houses versus units, we know that just from a price perspective, the unit market has had more space, more fat to grow, and the first home buyer segment has had to really compromise and accept that a detached house is possibly not in their price range these days. So we saw the unit market grow approximately 15% this year, which outpaced the attached house market, which is sat at about 10%. So I do expect to see some low teens growth come out in the official 2025 growth numbers when all is said and done early next year. And it was suburbs like Scarborough, Maylands and Vic Park that really saw a lot of that unit market growth, because we're talking about old stock here when it comes to units in those three suburbs, but also fantastic amenity in those locations. Whilst the market has been at pains to accept that older stock, eventually that's really all that's been left, and still a great location. Those properties have really flown into new stratospheres on pricing, crossing the $800,000 mark for 2-bedroom 50-year-old units in these suburbs. And if we quickly cross to the regional space, it's certainly been Bunbury and Albany, I think, that have been the real winners this year. Albany is absolutely having a renaissance right now. A huge amount of people travelling there, recognising its beauty and its laid-back lifestyle, and the lack of 40-degree days down there as well that I probably should mention. It's becoming a bit of a satellite city as working from home becomes more and more prevalent across the state. In addition to that, the Airbnb market has really allowed for some pretty lucrative investment opportunities down there as well. Let's move to interest rates and the 5% scheme. And we can't wrap up 2025 without talking about those two massive external factors. We know that every time the interest rates go down by 25 basis points, we see an increase in affordability of $15,000 for home buyers, especially those looking to get into the house and land space, which has been a big space for first home buyers this year. What does 2026 look like with an expectation for rate rises at the moment? Let's hope it's jawboning from Bullock at the moment, and it's not an expectation that rates will rise, but I think everyone needs to be prepared. But also recognise that we don't have an affordability issue in Western Australia. We make more than people in Sydney. Their house prices are 70% higher than ours, and if they can be 70% higher than ours, it means that they may have an affordability issue. We arbitrarily can't, if that's the case, on a broader basis. And what we have is a mobility issue. And whilst interest rate rises may hurt or dampen growth, it's not going to stop growth in 2026, in my humble opinion, because the fundamentals of demand and supply from immigration and our construction space aren't going to flip overnight. And so the outcome of that price growth simply is either dampened or accelerated by the outcome of interest rates in that point. But one thing that certainly has accelerated, and I think brought forward a lot of demand in the way that the building boost did, was the 5% Albanese first home buyer scheme being brought forward to October rather than the 1st of January. That set a fire under the house and land market. The land space is essentially out of stock right now and waiting for new stock to be brought online. And what that saw was another increase in prices per square metre of at least 20% across the board for land in places where a 375 square metre block was $250,000 pre-COVID. It's now $450,000 for the same product. You're not getting anything more for that. It's simply an outcome of what's been happening with regards to demand supply space, but also augmented massively by state and federal government schemes. And what it means is that a house and land package, whilst pre-COVID could be purchased for $450,000, now sits at about $850,000 for anything that isn't what you would consider a small unit. And that's crazy to think. A first home buyer has to shell out $850,000 for a house and land package on the fringes of Perth as a minimum, $1 million for anything that's not on the fringes, and still shell out around $40,000 in stamp duty to the Treasurer as a thanks for coming. I find that despicable, and I think that we'll see a bit of a watch this space in 2026 on what the state government may be having to do in response to what is clearly highway robbery right now in the first homeowners rated duty space. It's just not fair, to be frank, what's going on. If you're 5 years younger than your sibling, they didn't have to pay stamp duty. You have to pay about $40,000 to live next door to them if that land was available, not to mention the increase in the land and house price package in the first place. Really hard to swallow, I think, and certainly doesn't pass the pub test from a tax point of view. And that's my wrap for 2025. We've spent the last few weeks talking about policies, talking about outcomes. I really wanted to just tie it all together. Say a big thank you to everyone for listening for our 7th season. Foreshadow exciting season 8 with even more dynamism and a market that a lot of people can't pick, but one I think that will be shrouded in confidence generally because of the record low supply and the constant resilient demand that we have in Western Australia like we have never seen before. Thank you very much for listening. My pick on growth for 2027, well, I've always said if you put the same inputs in, the outputs will probably be pretty similar. I'd suggest that growth in Perth in 2026 will be somewhere close to 10%, possibly not the same growth that we saw this year because we won't have the same downward interest rate and 5% schemes supercharging prices. But as a function of demand and supply, we must see growth. And so we will see growth well above inflation and somewhere up to 10%, I believe, next year. Let's hope we see supply getting closer to 5,000 or 6,000 by this time next year, as we did a year ago. But overall, again, thank you very much for listening, participating, and getting excited about the Perth market with me. Have a great time off. I will speak to you next week regardless. Cheers.
Thank you for listening to another episode of the Perth Property Show. If you've only just joined the conversation, you can catch up by heading over to our website, perthpropertyshow.com.au, subscribing to the podcast, or joining our Facebook page. Don't forget to tune in next Monday at 7 a.m. for more expert insights, local analysis, and suburb spotlights. Happy hunting!